Part 3. Illustration of a payroll tax calculation. Meet Dean. Dean runs a successful business, employs one person, and pays remuneration on a monthly basis. He needs help in determining how to calculate his payroll tax obligation. Dean pays himself $10,000 per month and pays his employee a $6,000 gross monthly salary. He also gives his employee the occasional performance-based bonus. As there are 3 months in each quarter, we must multiply Dean's and his employees' respective monthly salaries by 3. This comes to $30,000 for Dean and $18,000 for his employee. Dean also paid his employee a performance-based bonus of $1,000 in month 3. By adding these monthly salaries plus the bonus, this leads to $49,000 being the total remuneration for the quarter. Class of taxpayer and the employer portion tax rate. The government, schools, churches, charities, and taxpayers approved for concessions 0%. Employers with employees in special situations, see Section 9 of the Payroll Tax Act of 1995, and self-employed farmers and fishermen 0%. Taxpayers with annual payroll tax less than $200,000 or less than $50,000 per quarter, 1%. Taxpayers with annual remuneration of not less than $200,000 and not more than $350,000, and the Bermuda Hospitals Board and the Corporations of Hamilton and St. George's, 2.5%. Taxpayers operating a restaurant or hotel with an annual payroll of $350,000 or greater, or with a quarterly payroll greater than $87,500, 5%. Taxpayers with annual remuneration of more than $350,000 and not more than $500,000, 5.25%. Retail establishments with annual remuneration over $500,000 and whose primary business is the sale of fashion, shoes, jewelry, and perfume, 6%. Taxpayers with an annual payroll greater than $500,000 and up to $1 million, 7.5%. Taxpayers with an annual payroll greater than $1 million, 10%. All exempt undertakings are taxed at 10.25%. Since Dean's business total remuneration for the quarter is less than $50,000, the employer portion, Part 1, will be taxed at 1%. Multiplying $49,000 by 1% gives us a tax of $490 for Dean's employer portion. This total will be added to the employee portion at the end of our calculations. The employee portion. Now that we've calculated Dean's employer portion of payroll tax, let's look at the progressive tax bands for the employee portion. In this case, we must calculate the progressive tax rate for 2 people, both Dean and his employee. For step 1, we need to split Dean's annualized remuneration into the progressive tax bands. Annualized remuneration means using a person's current pay period remuneration to estimate their level of annual remuneration. Since Dean earns $10,000 per month, we annualize his salary by multiplying it by 12 months. This gives Dean an annualized remuneration of $120,000. Now we can split this amount into the progressive tax bands, starting with the first $48,000 of Dean's salary. Based on progressive tax bands for April 2023 to March 2024, we would tax the first $48,000 of Dean's remuneration at 0.5%, giving us a total of $240. The next $48,000 will be taxed at 9.25%, which equals $4,440. The last $24,000 of Dean's remuneration is then taxed at 10% in Band 3, and that gives us $2,400. To calculate the total annualized tax for Dean, we must add the sums together. 240 plus 4,440 plus 2,400 equals $7,080. Next is step 2, to determine the amount of tax due for this quarter. This is calculated by first dividing Dean's annualized tax of $7,080 by 12 months, showing $590 tax per month. And this is then multiplied by 3 months, since there are 3 months in the quarter, showing $1,770 for Dean's employee portion of tax. Remember that we also need to include Dean's employee in our tax calculations. So we follow the same steps and apply them to Dean's employee. Remember, his employee earns $6,000 per month. By multiplying his remuneration by 12 months, we learn that Dean's employee's annualized remuneration is $72,000. Following step 1, we again split this amount into progressive tax bands. The first $48,000 is taxed at 0.5%, giving us $240. The remaining $24,000 is taxed at 9.25% and equals $2,220. We add the sums together to get $2,460. For step 2, we divide $2,460 by 12 months to identify the amount that Dean's employee owes in tax each month. Our calculation gives us $205. We then multiply $205 by the 2 months in this quarter for a total of $410. You may notice that we only used 2 months to determine the employee's quarterly tax rather than the 3 months we used in Dean's calculations. This is because the third month is a little different, since Dean's employee also received a bonus with his recurring salary. Therefore, we must calculate the tax for the third month separately. The employee's monthly tax of $205 must be added to the tax on the bonus earned for the month. The $1,000 bonus is taxed at 9.25%, since this is still within the remuneration range allowed in Progressive Tax Band 2. $1,000 multiplied by 9.25% gives us $92.50. We then add that $92.50 to the $205 from the third month of the third quarter to get $297.50. Finally, we determine the employee's total tax for this quarter. Month 1, the tax is $205. Month 2, the tax is $205. Month 3, the tax is $297.50, and that includes the tax on the bonus. Total tax is $707.50 for Dean's employee. Remember that in order to determine the employee portion of payroll tax, we must add both Dean's and his employee's total tax numbers. That's $1,770 plus $707.50, and that equals $2,477.50. Now we can determine the total tax liability for Dean's business this quarter. Part 1. The employer portion tax equals $490 as we earlier determined. Part 2. The employee portion tax is $2,477.50. Adding both portions together gives us a total tax due for the quarter of $2,967.50.